Based on the historical data and forecast, Bitcoin shows a mixed trend with periods of consolidation and upward movement. The RSI fluctuates around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the price has consistently held above the support level of $83,800, suggesting a bullish bias. The Bollinger Bands have been widening, indicating increased volatility and potential for price swings. Considering these factors, I recommend a long position with a conservative approach. The entry price will be $85,800, aligning with the first day of the forecast. A stop-loss order will be placed at $83,800, just below the established support level, to limit potential losses. The initial target price is set at $87,300, corresponding to the forecast price on April 3, 2025. If the price reaches this target, we will move the stop-loss to the entry price to protect profits and allow for potential further gains. This strategy combines support and resistance levels with forecast data and technical indicators for a balanced risk-reward profile. Based on the historical data and forecast, Bitcoin Cash has shown a volatile trend with support at $322 and resistance at $345. The RSI consistently remains between 44 and 51, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price swings. Given the forecast for the next week, starting with $326 and declining to $313, I recommend a contrarian strategy. We will initiate a long position at $320, placing a stop-loss order at $315 to protect against a potential downward trend. The initial target price will be $330, aiming for a modest profit. To enhance the strategy, we will incorporate the Bollinger Bands. If the price touches the lower band, around $315, it could signal an oversold condition and a potential bounce. In this scenario, we will consider entering a long position at $315 with a stop-loss at $310 and a target price of $325. If the price reaches the upper band, around $345, it could indicate an overbought condition, prompting us to consider a short position. However, given the current forecast, a conservative approach is advised. Therefore, we will stick to the initial long strategy with an adjusted target price of $335 to capitalize on the anticipated rebound. This portfolio combines the RSI and Bollinger Bands to create a robust and adaptable investment approach. Based on the historical data and forecast, STRK shows a mixed trend with periods of consolidation and upward movement. The RSI values fluctuate between 35.8 and 52.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering the support price of $0.66 and the resistance of $0.725, and the forecast prices which are generally increasing, I propose a moderately bullish strategy. My recommended strategy is to enter a long position at $0.68, capitalizing on the forecast price and the recent upward momentum. We'll set a stop-loss at $0.65, just below the support level, to protect against a potential reversal. The initial target price will be $0.73, aligning with the forecast and providing a reasonable profit margin. If the price reaches $0.73, we'll consider moving the stop-loss to break-even, $0.68, to secure profits and potentially extend the target price to $0.74, contingent on the price action and RSI readings. This strategy combines technical indicators and forecast data to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a mixed trend with periods of volatility. The RSI consistently remains below 50, indicating a generally weak momentum. However, the price has been fluctuating around the support level of $1,980, and the forecast suggests a slight downward pressure in the coming week. Considering the RSI is currently around 43.2, we are not in an oversold position, but we are also not overbought. Therefore, a cautious strategy is warranted. We will implement a short-term trading strategy focused on capitalizing on minor price fluctuations. Our strategy will be a combination of RSI and Bollinger Bands. We will initiate a long position when the price touches the support level of $1,980 and the RSI is below 40. The entry price will be $1,980. A stop loss will be placed just below the support level at $1,950 to mitigate potential losses. The target price will be set at $2,020, based on the resistance level and a conservative profit margin. If the price breaks below the support level of $1,980, we will close the position immediately. This strategy aims for quick profits while managing risk effectively. Based on the historical data and forecast, XRP demonstrates a slightly upward trend with periods of consolidation. The RSI fluctuates around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential trading opportunities. The lower band has been consistently near the support price of $2.03, while the upper band has tested higher levels. Considering the forecast for the next week, which predicts prices around $2.33 to $2.39, a moderately bullish strategy is advisable. We will implement a combined strategy utilizing RSI and Bollinger Bands for optimal returns. Our strategy involves a tiered approach. First, we will initiate a long position at $2.33, coinciding with the forecast price and the center of the Bollinger Bands. The stop loss will be set at $2.03, aligning with the established support level, to limit potential losses. The initial target price is $2.45, a previous resistance level. If the price reaches $2.45, we will move the stop loss to the entry price of $2.33 to secure profits. A secondary target price is $2.54, a significant high from the recent past. This combined strategy aims to capitalize on the predicted upward trend while mitigating risks through strategic stop-loss placement. Based on the historical data and forecast, Binance Coin shows a generally upward trend, consistently testing the resistance level of $637. The RSI fluctuates around the mid-range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering these factors, I recommend a long position strategy with a focus on capitalizing on the upward momentum. The entry price should be $633, coinciding with the first forecast price and a recent bounce from the 620s. A stop loss should be placed at $620 to limit potential losses, and the initial target price should be $645, aligning with the forecast for March 28, 2025. To refine this strategy, we'll incorporate RSI signals. If the price dips to $618, which is near the support level and within the lower Bollinger Band, consider a second entry with a stop loss at $610 and a target of $630. This leverages potential oversold bounces. Combining these two strategies, the portfolio will consist of a primary long position at $633 with a target of $645 and a secondary opportunistic long position at $618 with a target of $630. This diversified approach balances risk and reward, aiming for high returns while protecting against significant downside risk. Based on the historical data and forecast, Stellar shows a slight upward trend, with price fluctuations within the resistance of $0.294 and support of $0.262. The RSI fluctuates between 39.8 and 52.2, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering these factors, I recommend a long position strategy focusing on capitalizing on short-term upward movements while managing risk effectively. My strategy involves a tiered entry approach. Initially, enter a long position at $0.279 when the price approaches the lower Bollinger Band. Set a stop loss at $0.265, just below the support level, to limit potential losses. The first target price is $0.288, aligning with the center of the Bollinger Bands. If the price reaches this target, consider moving the stop loss to break even. For a more aggressive approach, if the price breaks above $0.288, set a second target at $0.294, the resistance level. This strategy combines RSI and Bollinger Band signals to maximize potential returns while minimizing risk. Based on the historical data and forecast, Toncoin shows a clear uptrend with increasing momentum. The RSI consistently moves above 50, indicating bullish sentiment. The forecast prices for the next week project a continued upward trajectory, with prices reaching $4.22. The support price remains steady at $3.86, while the resistance is at $4.62. I recommend a long position strategy. Entry price should be $3.83, with a stop loss set at $3.86, just above the support level. The initial target price should be $4.05, aligning with the first forecast price. To refine this strategy, I'll incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential buying opportunity. The center of the Bollinger Bands is consistently rising, further confirming the uptrend. I suggest adjusting the target price to $4.22, coinciding with the final forecast price. If the RSI reaches 80, consider taking partial profits and tightening the stop loss to $3.95 to protect gains. This combined approach, leveraging both RSI and Bollinger Bands, offers a robust strategy for high returns, balancing risk and reward effectively. Based on the historical data and forecast, Cardano shows a fluctuating trend with recent consolidation. The RSI consistently remains between 45 and 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening and narrowing, suggesting periods of increased and decreased volatility. Considering this, I recommend a moderately bullish strategy with a focus on potential breakouts. We will initiate a long position at $0.728, just below the opening forecast price and near the recent support level. A stop loss will be placed at $0.673, aligning with the established support price to protect against a potential downside reversal. The target price for this trade will be $0.755, reflecting the upper end of the forecast range and a reasonable profit target given the current market conditions. This strategy combines the RSI and Bollinger Band signals, aiming to capitalize on a potential upward movement while mitigating risk. If the price breaks above the upper Bollinger Band, which has been fluctuating between $0.932 and $1.03, we will consider adjusting the target price upward. This dynamic approach allows for flexibility and adaptation to changing market dynamics, maximizing the potential for high returns. Based on the historical data and forecast, Litecoin shows a fluctuating trend with a recent consolidation around the 91.3 support level and 94.4 resistance level. The RSI consistently hovers around the mid-30s to low 40s, indicating neither strong overbought nor oversold conditions. However, the forecast for the next week predicts a downward trend, with prices potentially dropping to 88.7. Combining the RSI and Bollinger Bands, I suggest a short-term contrarian strategy. We will enter a short position at 90.3 plus $100, setting a stop loss at 94.4 plus $100, just above the recent resistance. The initial target price will be 88.7 plus $100, aligning with the forecast low. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the upper band, we'll exit the short position and take a small profit. This will help mitigate potential losses if the price unexpectedly reverses. If the forecast continues to decline, we can adjust the target price to 88.7 plus $100, aiming for a more substantial gain. The RSI readings suggest that the market is not yet significantly oversold, so a cautious approach with a tight stop loss is warranted. This portfolio combines the RSI and Bollinger Bands to create a high-probability, high-return investment strategy. Based on the historical data and forecast, Swaycoin demonstrates a clear uptrend, consistently testing and surpassing the $2.35 resistance level. The RSI consistently moved above 40, indicating strengthening momentum. The forecast predicts a continued upward trajectory, with prices reaching $2.8 within the next week. Considering these factors, I recommend a long position strategy. We will enter a long position at $2.48. The stop loss will be set at $2.35, just below the recent support and resistance levels, to mitigate potential losses. Our initial target price will be $2.78, aligning with the forecast high for the week. To refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading above the center band reinforces the uptrend. If the price approaches the upper band, consider taking partial profits at $2.78 and setting a trailing stop loss to protect gains. If the price breaks below the lower band, it signals a potential pullback, triggering the stop loss at $2.35. This layered approach, combining RSI and Bollinger Bands, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Aptus shows an overall upward trend. The RSI consistently remains above 40, indicating a bullish momentum. The forecast prices for the next week are also generally positive, further reinforcing the upward trend. Considering the RSI, when it dips below 40, it signals a potential buying opportunity. I recommend a strategy where we buy when the RSI falls below 40 and sell when it reaches 80. Let's implement this strategy with a specific example. On March 28, 2025, the RSI is 40.1, which is slightly below our buy threshold. We will enter a long position at $5.86. Our stop loss will be set just below the support level at $5.68 to protect against potential downside risks. The target price will be set at $6.04, aligning with the forecast price and a reasonable profit margin. To incorporate the Bollinger Bands, we can refine our strategy further. When the price touches the lower band, it suggests a potential oversold condition, reinforcing the RSI signal. Conversely, when the price touches the upper band, it indicates a potential overbought condition, prompting us to consider taking profits. Combining these indicators, we can create a portfolio. The primary strategy is the RSI-based approach, with the Bollinger Bands acting as a secondary confirmation. If the RSI falls below 40 and the price is near the lower Bollinger Band, the buy signal is strengthened. For the March 28, 2025, entry at $5.86, we will maintain the stop loss at $5.68 and the target price at $6.04. This blended approach aims to capitalize on the upward trend while mitigating risks using both RSI and Bollinger Bands. Based on the historical data and forecast, SE has shown a fluctuating trend with a recent upward bias. The RSI values have mostly remained above 30, indicating a neutral to slightly bullish momentum. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Considering the support price of 0.193 and the resistance of 0.227, and the forecast predicting prices around 0.202 to 0.207, I propose a moderately bullish strategy. We will initiate a long position at $0.202, capitalizing on the predicted upward movement and the RSI currently hovering around 40. To manage risk, a stop loss will be set at $0.198, just above the support level and below the bottom of the Bollinger Bands. The initial target price will be $0.22, aligning with the resistance level and providing a reasonable profit margin. To optimize the portfolio, I suggest a dynamic adjustment based on the Bollinger Bands. If the price approaches the upper Bollinger Band, around $0.216, we will move the stop loss to break even to secure profits and reduce risk. If the price reaches the $0.22 target, we will consider taking partial profits and setting a new target at $0.23, contingent on a confirmed breakout above the resistance. This approach combines RSI-based entry with Bollinger Band-driven risk management and profit-taking, aiming for high returns while mitigating potential losses. The final portfolio will include a long position at $0.202, a stop loss at $0.198, and an initial target price of $0.22, with adjustments based on Bollinger Band movements. Based on the historical data and forecast, Ethereum Classic shows a slightly downward trend. The support price is consistently at $17.7, and the resistance is at $18.4. The RSI fluctuates between 39.6 and 48.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I recommend a cautious strategy focusing on short-term trades. My proposed strategy is a combination of RSI and Bollinger Band signals. First, look for opportunities when the price approaches the $17.7 support level and the RSI dips below 20, indicating an oversold condition. Enter a long position at $17.7, with a stop-loss placed just below the support at $17.5. Set a target price at the nearest resistance level of $18.4. If the RSI rises above 80 while the price is near the upper Bollinger Band, consider a short position at $18.4, with a stop-loss at $18.6 and a target price at $17.7. This portfolio balances risk and potential reward, capitalizing on short-term price fluctuations while respecting key support and resistance levels. Based on the historical data and forecast, Polygon shows a slight upward trend with periods of consolidation. The RSI consistently fluctuates between 32.5 and 48.3, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been oscillating within a range, with the lower band providing support and the upper band acting as resistance. Considering the current RSI of 47.4, which is approaching the overbought level of 80, and the forecast suggesting a potential slight increase, I recommend a moderately bullish strategy. The entry price should be $0.223, coinciding with the forecast price on April 1, 2025. A stop-loss should be placed at $0.218, just below the forecast price and near the lower Bollinger Band, to limit potential losses. The target price should be $0.233, reflecting the recent high reached on March 26, 2025, and aligning with the slight upward trend. This strategy combines the RSI, Bollinger Bands, and forecast data to maximize potential returns while minimizing risk. The portfolio will allocate 60% of the capital to this moderately bullish strategy, 20% to a conservative strategy focusing on the support level of $0.22, and 20% to a neutral strategy holding cash to capitalize on potential price dips. This diversified approach ensures resilience against unexpected market volatility and optimizes overall investment performance. Based on the historical data and forecast, AEVO shows a slight upward trend, consolidating within a defined range. The RSI consistently hovers between 37 and 49, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of decreasing volatility. The forecast for the next week indicates a stable price around $0.124 to $0.128. Considering these factors, I recommend a moderately bullish strategy focusing on short-term gains. We will implement a combined strategy utilizing RSI and Bollinger Bands. Entry price will be $0.123 when the price touches the lower Bollinger Band. The stop-loss will be set at $0.119, just below the lower band to protect against unexpected drops. The initial target price will be $0.13, aligning with the resistance level and a reasonable profit margin. If the price reaches the target, we will move the stop-loss to the entry price $0.123 to secure profits and allow for further upside potential. This strategy aims to capitalize on short-term price fluctuations while minimizing risk through strategic stop-loss placement. Based on the historical data and forecast, optimism shows a fluctuating trend with a tendency to bounce between the support price of $0.855 and the resistance price of $0.905. The RSI fluctuates around 40, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting potential volatility. The forecast for the next week projects prices hovering around $0.87, indicating a sideways movement. I recommend a strategy that combines RSI and Bollinger Bands to capitalize on short-term fluctuations. My proposed strategy is to implement a short-term swing trading approach. We will enter a long position when the price touches the lower Bollinger Band and the RSI is below 40, indicating a potential oversold condition. Specifically, we will enter a long position at $0.864. The stop-loss will be set just below the support price at $0.85 to protect against a potential downward reversal. The target price will be set at the resistance price of $0.905, aiming to capture a quick profit. If the price fails to reach the target and shows signs of reversing, we will exit the position earlier. This strategy prioritizes managing risk and capitalizing on short-term price movements within the established trading range. Based on the historical data and forecast, STRK has been fluctuating within a range, testing the support level of $0.167 and the resistance of $0.179. The RSI has been hovering around 40, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting potential volatility. Given the forecast predicts a downward trend, with prices ranging from $0.167 to $0.169, I propose a short selling strategy. Entry price should be $0.173, with a stop loss set at $0.177, just above the upper Bollinger Band, to limit potential losses if the price unexpectedly rises. The target price is $0.167, aligning with the support level and the forecast low. To refine this strategy, I will incorporate RSI signals. When the RSI dips below 30, oversold, consider a long position with an entry price of $0.169, a stop loss at $0.167, and a target price of $0.179, aiming to capitalize on a potential bounce. Conversely, when the RSI exceeds 70, overbought, initiate a short position with an entry price of $0.173, a stop loss at $0.177, and a target price of $0.167, profiting from a potential decline. Combining these signals with Bollinger Bands, I would prioritize the short selling strategy given the forecast's downward bias, allocating 60% of the portfolio to short positions and 40% to long positions based on RSI signals. Based on the historical data and forecast, Solana exhibits volatility with a recent trend of consolidating around the $135 to $143 range. The RSI consistently fluctuates, currently hovering around 41.8 to 52.1, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a slight downward pressure, with prices expected to remain between $134 and $136. Considering the Bollinger Bands, the price is approaching the lower band, suggesting a potential for a short-term pullback. Therefore, I recommend a cautious long position with a focus on risk management. The strategy involves entering a long position at $134, placing a stop loss at $131 just below the lower Bollinger Band to limit potential losses. The initial target price is set at $138, aligning with the recent resistance level and a reasonable profit margin. If the price reaches $138, consider moving the stop loss to break even at $134 to secure profits and potentially ride further upward momentum. This portfolio prioritizes a conservative approach, balancing potential gains with robust risk mitigation. Based on the historical data and forecast, Jupiter demonstrates a sideways trend with periods of volatility. The RSI consistently fluctuates around the 40 mark, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been widening recently, suggesting increased price volatility. Considering the support price of $0.491 and the resistance price of $0.668, the price is currently trading within this range. The forecast for the next week predicts a downward trend, with prices ranging from $0.516 to $0.496. Therefore, I recommend a short-term contrarian strategy focusing on capitalizing on minor pullbacks. My strategy involves entering a long position when the RSI dips below 30, indicating an oversold condition. Specifically, I suggest entering a long position at $0.502. Place a stop-loss order just below the support level at $0.48 to limit potential losses. Set a target price at the resistance level of $0.668, aiming to capture a significant portion of the trading range. As the forecast predicts a downward trend, I recommend a smaller position size to manage risk. If the price breaks below the support level of $0.491, immediately exit the position to avoid further losses. This strategy combines RSI and Bollinger Band signals with support and resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, render shows a clear upward trend, consistently testing and breaking through the resistance level of $4.04. The RSI consistently fluctuates above 40, indicating strengthening momentum, and the Bollinger Bands have been widening, suggesting increased volatility and potential for further price movement. Considering this, I recommend a long position strategy with an entry price of $3.7. To mitigate risk, set a stop loss at $3.5, just below the lower Bollinger Band. For the target price, aim for $4.06, aligning with the forecast price for April 3, 2025, and providing a substantial profit margin. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 20, consider accumulating more shares at $3.7. Conversely, if the RSI exceeds 80, take partial profits at $4.06. This dynamic approach, combining trend analysis, Bollinger Band signals, and RSI confirmation, offers a robust framework for maximizing returns while managing risk in the volatile cryptocurrency market. The portfolio will be 60% long position, 20% RSI signal accumulation, and 20% RSI signal profit taking. Based on the historical data and forecast, Solana name service exhibits a slightly downward trend, particularly evident in the recent forecast prices hovering around $0.107 to $0.104. The RSI values fluctuate between 40 and 48, indicating neither strong overbought nor oversold conditions. However, the price has consistently tested the $0.114 resistance level without breaking through, suggesting potential for a pullback. Considering these factors, I propose a short position strategy. Enter a short position at $0.113. Set a stop loss at $0.116, just above the recent resistance and the upper Bollinger Band. The initial target price is $0.107, aligning with the forecast price and the lower Bollinger Band. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, consider covering the short position or moving the stop loss lower. Conversely, if the price touches the lower Bollinger Band and the RSI is above 30, it might signal a potential reversal, prompting a re-evaluation of the short position. The second target price is $0.104, which is the lowest forecast price. This layered approach aims to maximize potential gains while mitigating risk by adjusting the position based on dynamic market signals. Based on the historical data and forecast, Doge-Coin shows a slight upward trend, consistently bouncing off the support price of $0.167. The RSI readings fluctuate between 36 and 52, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. The forecast for the next week predicts a continued upward movement, with prices potentially reaching $0.192. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.179. The stop loss will be set just below the support level at $0.166 to protect against a potential downside reversal. The initial target price will be $0.189, aligning with the forecast and a reasonable profit margin. To optimize the strategy, we'll incorporate an RSI-based exit signal. If the price reaches $0.189 and the RSI exceeds 80, we will take partial profits and move the stop loss to break even. Subsequently, if the price continues to rise and the RSI approaches 80 again, we will consider taking further profits and tightening the stop loss. Conversely, if the price falls back towards $0.17 and the RSI drops below 20, we will consider exiting the position or reducing the exposure. This dynamic approach allows us to capitalize on the upward momentum while mitigating potential losses, aiming for a high-return investment within a controlled risk environment. Based on the historical data and forecast, PEPE shows an upward trend with consistent price increases over the past 2 weeks, supported by the forecast data for the upcoming week. The RSI consistently fluctuates above 40, indicating a moderately bullish momentum, and the price is currently approaching the resistance level of $0.0000850. The Bollinger Bands have been widening slightly, suggesting increasing volatility and potential for further price movement. I recommend a long position with an entry price of $0.00000810 on March 28, 2025. The stop loss should be set at $0.00000780, just below the lower Bollinger Band, to protect against unexpected downturns. A target price of $0.00000910, slightly above the upper Bollinger Band and beyond the current resistance, is set to capture potential gains. To refine the strategy, I will integrate the RSI indicator. If the RSI falls below 30, indicating an oversold condition, we should consider entering a long position at $0.00000710 with a stop loss at $0.00000690 and a target price of $0.00000810. If the RSI exceeds 70, indicating an overbought condition, we should consider exiting the current position to avoid potential losses. Combining these three strategies, I will prioritize the long position with an entry price of $0.00000810, a stop loss of $0.00000780, and a target price of $0.00000910, as it aligns with the overall upward trend and technical indicators. This approach balances risk and reward, capitalizing on the anticipated price increase while providing a safety net against adverse market movements. Based on the historical data and forecast, SHIB shows a slight upward trend, fluctuating within a defined range. The RSI consistently hovers between 40 and 60, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation. The forecast for the next week predicts a continued upward movement, albeit at a modest pace. Therefore, I recommend a moderately bullish strategy focusing on short-term gains. My strategy will be a hybrid approach combining RSI and Bollinger Band signals. We will enter a long position at $0.000135 when the price touches the lower Bollinger Band. The stop loss will be set at $0.000131, just below the support level, to protect against a sudden downturn. The target price will be $0.000140, aligning with the upper Bollinger Band and the forecast price. This strategy aims to capitalize on the anticipated upward movement while minimizing risk with a well-defined stop loss. This position should be held for a maximum of 3 days. Based on the historical data and forecast, Dog with Hat shows a volatile trend with periods of consolidation and minor upward movement. The RSI consistently fluctuates between 40 and 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price swings. Considering the support price of $0.517 and the resistance price of $0.581, a cautious approach is warranted. My recommended strategy is a moderately bullish position, aiming to capitalize on potential upward movement while mitigating risk. I suggest a long position with an entry price of $0.503. The stop loss should be set slightly below the support level at $0.50 to protect against a potential downturn. The initial target price should be the resistance level at $0.581. However, given the recent RSI readings and Bollinger Band's expansion, a secondary target price of $0.60 can be considered for a more aggressive return. This strategy combines the RSI's indication of a neutral market with the Bollinger Band signal of increased volatility, aiming for a balance between risk and reward. The portfolio will be 60% based on the Bollinger Bands, 30% based on the RSI and 10% based on the support and resistance prices. Based on the historical data and forecast, Doge-Coin exhibits a slight upward trend. The price has consistently bounced off the support level of $0.00235, and the forecast suggests a continuation of this upward movement. The RSI values, while fluctuating, generally remain above the oversold level of 20, indicating that the asset is not significantly undervalued. The Bollinger Bands show a narrowing trend recently, which often precedes a breakout. Considering these factors, I propose a long position strategy. The entry price will be $0.00256. The The stop loss will be set just below the support level at $0.00235, providing a buffer against potential downward fluctuations. The initial target price will be $0.0027, aligning with the forecast for March 29, 2025. To enhance the strategy, we can implement a trailing stop loss. Once the price reaches $0.0027, we will move the stop loss to $0.0025. If the price continues to rise, we will adjust the stop loss further to protect profits. The final target price will be $0.0027, considering the resistance level and the overall market sentiment. This approach combines the benefits of an initial target with a dynamic stop loss, maximizing potential gains while minimizing risk. The portfolio will consist of 60% of the long position strategy and 40% of the trailing stop loss strategy to ensure the most efficient portfolio. Based on the historical data and forecast, NEAR protocol shows a slight upward trend. The RSI fluctuates between 39.7 and 55.6, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering these factors, I propose a combined strategy incorporating RSI and Bollinger Bands. Initially, we will enter a long position at $2.9 when the RSI dips below 40, which is near the oversold level. We will set a stop loss at $2.7, just below the lower Bollinger Band to mitigate potential losses. Our initial target price will be $3.07, aligning with the forecast and the upper Bollinger Band. As the price approaches $3.07, we will reevaluate the RSI and Bollinger Bands. If the RSI remains below 80 and the price is still within the upper Bollinger Band, we will extend the target price to $3.1. If the RSI crosses above 80 or the price breaks below the center of the Bollinger Bands, we will consider taking profits or adjusting the stop loss to protect gains. This dynamic approach allows us to capitalize on the upward trend while managing risk effectively. This strategy aims for high returns by leveraging both technical indicators and forecast data, with clear entry, stop loss, and target prices. Based on the historical data and forecast, Internet Computer demonstrates a slight upward trend, supported by the consistently rising forecast prices. The RSI values have been fluctuating between 40 and 52, indicating neither extreme oversold nor overbought conditions for most of the period. However, the recent climb towards 52 suggests a potential for a pullback. Considering the support price of $5.99 and the resistance of $7.16, a strategic entry point can be identified. I recommend a long position entry at $6.03. To mitigate risk, place a stop-loss order at $5.96, just below the recent support level. A reasonable target price, considering the resistance, would be $6.41, offering a potential gain of $0.38. To further refine this strategy, we'll incorporate the Bollinger Bands. The price consistently trading within the band suggests moderate volatility. A potential entry could be triggered when the price touches the lower band, around $5.15, signaling a potential oversold condition. However, given the upward trend, a more conservative approach is to wait for a slight pullback. I suggest a long position entry at $6 when the price retraces slightly. Place a stop loss at $5.93, just below the lower Bollinger Band. Set a target price at $6.33, aligning with the upper Bollinger Band, offering a potential gain of $0.33. Combining these strategies, the most efficient portfolio would involve a long position entry at $6.03, a stop loss at $5.96, and a target price at $6.41, capitalizing on the upward trend and resistance levels. Based on the historical data and forecast, Injective demonstrates a sideways trend with fluctuations around the $10 mark. The RSI consistently hovers around the 40 level, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show periods of contraction and expansion, suggesting varying levels of volatility. Considering the support price at $10.3 and the forecast for March 28, 2025, at $9.96, I recommend a long position entry at $9.96. A stop loss should be placed slightly below the support level at $9.86 to limit potential losses. The initial target price is set at $10.6, aligning with a reasonable upward movement based on recent price action and the Bollinger Bands. To enhance the strategy, I propose incorporating RSI signals. If the price dips and the RSI falls below 20, indicating an oversold condition, a long entry at that price is warranted with a stop loss at $9.7 and a target of $10.3. Conversely, if the RSI reaches 80 or above, signaling an overbought condition, consider a short position with an entry at that price, a stop loss at $10.7, and a target at $9.8. Combining these approaches creates a dynamic portfolio that adapts to changing market conditions, maximizing potential returns while managing risk effectively. Based on the historical data and forecast, BTC shows a recent downtrend with fluctuating RSI values, hovering around the oversold territory. The RSI consistently below 50 suggests a potential for a rebound. Considering the support price of $262 and the forecast for March 28, 2025, at $249, I recommend a long position. Entry price should be $249, with a stop loss set at $244 to mitigate risk. The initial target price is $257, aligning with the forecast for March 30, 2025, and the upper Bollinger Band. To refine the strategy, we'll incorporate Bollinger Bands analysis. The recent contraction of the Bollinger Band suggests a potential breakout. If the price breaks above the upper Bollinger Band, around $296 on March 31, 2025, we will move the target price to $285. Conversely, if the price falls below the lower Bollinger Band, around $229, the position will be closed. This dynamic approach, combining RSI and Bollinger Bands, offers a balanced strategy with clear entry, stop loss, and target levels, aiming for high returns while managing risk effectively. Based on the historical data and forecast, THETA network shows a mixed trend with periods of consolidation and upward movement. The RSI consistently stays below 50, indicating a generally weak upward momentum. The Bollinger Bands suggest periods of volatility, with prices occasionally touching the upper and lower bands. Considering the recent price action and forecast, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 30, indicating an oversold condition. Specifically, enter a long position at $0.922. Place a stop-loss order just below the support level at $0.81 to limit potential losses. Set a target price near the recent resistance level at $0.95. To optimize the portfolio, I propose a blended strategy integrating RSI, Bollinger Bands, and support/resistance levels. The primary strategy will be based on the RSI, aiming to capitalize on short-term bounces from oversold conditions. When the RSI falls below 30, enter a long position at $0.931. The stop loss will be set at $0.815, just below the support level. The initial target price will be $0.95, aligning with the recent resistance. If the price breaks above $0.95, consider moving the stop loss to break even and adjusting the target price to $0.981. This approach balances risk and reward, allowing for potential profit while protecting against significant losses. Based on the historical data and forecast, WorldCoin shows a mixed trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 40 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased volatility. Considering the support price of $0.898 and resistance of $1.04, I propose a strategy focused on capitalizing on potential breakouts. We will implement a buy strategy when the price breaks above the upper Bollinger Band, aiming to profit from the increased volatility. Specifically, I recommend entering a long position at $0.956, coinciding with a potential breakout above the upper Bollinger Band on March 27, 2025. The stop loss should be set just below the lower Bollinger Band at $0.759 to limit potential losses if the breakout fails. The target price will be the resistance level of $1.04, representing a significant profit margin. This strategy combines technical indicators and price action analysis to maximize potential returns while managing risk effectively. I anticipate a high probability of success given the recent upward momentum and the potential for a breakout. Based on the historical data and forecast, Hooked Protocol shows a slight upward trend. The price has been fluctuating between a support of $0.129 and a resistance of $0.183. The RSI values have generally remained between 35 and 48, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting decreasing volatility. Considering the forecast for the next week, with prices hovering around $0.146 to $0.153, a moderately bullish strategy is appropriate. Therefore, I recommend a long position strategy. Enter a long position at $0.146. Set a stop-loss order at $0.13, slightly below the recent lows and the support price to mitigate potential losses. Aim for a target price of $0.16, aligning with the upper end of the recent trading range and a reasonable profit target. This strategy combines trend analysis, support and resistance levels, and the RSI and Bollinger Bands indicators to maximize potential returns while managing risk. The RSI is not in the oversold territory, so it's not the primary indicator for this trade. The Bollinger Bands narrowing suggests a potential breakout, and the forecast prices support a move towards the $0.16 target. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a mixed trend with periods of consolidation and upward movement. The RSI consistently hovers around the 40 range, indicating neither strong bullish nor bearish momentum. The Bollinger Bands show price fluctuating within the bands, suggesting volatility. Considering the support price of $0.514 and the resistance of $0.721, I propose a moderately aggressive strategy focusing on short-term gains. My strategy involves a long position entry at $0.521 on March 28, 2025, aligning with the initial forecast price and recent upward movement. A stop loss will be placed at $0.505, just below the recent support level and the bottom of the Bollinger Bands to protect against a potential downturn. The target price is set at $0.562, near the recent high and a reasonable profit target considering the current market conditions. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk. Based on the historical data and forecast, Polkadot exhibits an overall upward trend. The price has consistently tested and bounced off the support level of $4.32, while approaching the resistance level of $5.16. The RSI indicator fluctuates between 42.3 and 55.7, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening, suggesting increased volatility. Considering these factors, I propose a long position strategy with an entry price of $4.55, a stop-loss price of $4.32, and a target price of $5.16. This strategy aims to capitalize on the prevailing upward trend while mitigating potential losses through a well-defined stop-loss. To refine the strategy, I will incorporate the RSI and Bollinger Bands indicators. When the RSI falls below 30, indicating an oversold condition, I will enter a long position. Conversely, when the RSI exceeds 70, indicating an overbought condition, I will consider exiting the position. The Bollinger Bands will serve as dynamic support and resistance levels. If the price touches the lower band, it signals a potential buying opportunity. If the price touches the upper band, it suggests a potential selling opportunity. Combining these indicators, I recommend entering a long position at $4.6, setting a stop loss at $4.5, and targeting a price of $4.8. This blended approach offers a balanced strategy that leverages multiple technical indicators to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Filecoin demonstrates a fluctuating trend with periods of consolidation around the 3.00 level. The RSI values generally fluctuate between 40 and 52, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a slight upward movement, with prices hovering around 3.00 to 3.07. Considering the support level at 2.99 and resistance at 3.53, a conservative strategy focusing on short-term gains within this range is advisable. I recommend a long position with an entry price of $3, a stop loss at $2.95, and a target price of $3.20. This strategy leverages the potential for a slight upward movement as indicated by the forecast, while the stop loss protects against significant downside risk. To enhance the strategy, I will incorporate the Bollinger Bands. When the price touches the lower band, it indicates a potential oversold condition, and when it touches the upper band, it indicates a potential overbought condition. Considering the forecast, I recommend a long position when the price approaches the lower Bollinger Band, specifically around $2.95. Set a stop loss at $2.90 and a target price of $3.15. This approach combines RSI and Bollinger Bands to capitalize on short-term price fluctuations. The final portfolio will be a combination of the two strategies, prioritizing the Bollinger Band strategy due to its responsiveness to recent price action and the forecast indicating a potential upward trend. This blended approach provides a balance between risk mitigation and potential profit maximization. Based on the historical data and forecast, Conflux shows a generally upward trend with some volatility. The RSI values fluctuate between 35.6 and 50.0, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been widening recently, suggesting increasing market volatility. The support price remains consistently at $0.0833, while the resistance is at $0.102. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels to maximize potential returns. My strategy involves a tiered approach. First, when the RSI falls below 30, initiate a long position at $0.0833, placing a stop loss at $0.078. Target price will be $0.098. Second, when the price touches the upper Bollinger Band, consider taking profit at $0.098. Third, when the price reaches the resistance level of $0.102, secure profits and consider a short position. This combined approach aims to capitalize on both momentum and mean reversion, adapting to the changing market conditions while minimizing risk. This strategy should yield high returns. Based on the historical data and forecast, Ethereum name service shows a slight upward trend with periods of volatility. The RSI consistently fluctuates between 30 and 45, indicating oversold and overbought conditions, but not strongly. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakout opportunities. Considering the support price of $16.6 and the resistance of $27.7, I propose a strategy combining RSI and Bollinger Bands to capitalize on these movements. We will initiate a long position when the RSI dips below 30 and the price touches the bottom Bollinger Band, anticipating a rebound. Specifically, on April 3, 2025 Thursday, the RSI is 38.6 and the bottom Bollinger Band is $15.3. Enter a long position at $15.3, setting a stop loss at $14.8 to protect against further downside risk. The initial target price is $17.1, aligning with the center of the Bollinger Bands and a reasonable profit margin. If the price continues to rise, we will adjust the stop loss upwards to lock in profits and consider a secondary target price of $17.8, near the recent resistance levels. This combined strategy leverages the momentum from the oversold condition and the volatility indicated by the Bollinger Bands, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Avalanche shows a clear upward trend. The price has been consistently making higher highs and higher lows, supported by the increasing RSI values. The forecast for the next week indicates continued upward momentum, with prices expected to range between $21.2 and $22.8. Considering the RSI, we'll implement a strategy that combines RSI signals with Bollinger Bands for confirmation. The RSI is currently hovering around 55.0, which is not in the oversold or overbought zone. However, given the upward trend, we'll look for pullbacks to the lower Bollinger Band as buying opportunities. Our strategy will be a combination of RSI and Bollinger Bands. We will enter a long position when the price touches the lower Bollinger Band and the RSI is above 30. For instance, on March 14, 2025, the price was $18.5 and the lower Bollinger Band was $16.2, and RSI was 39.3. We will wait for a pullback to around $18.5, with a stop loss at $16.5 and a target price of $22.8. Given the forecast, we anticipate a continued rise. We'll adjust the stop loss to break even once the price reaches $20.8. This approach combines trend following with mean reversion, aiming to capitalize on both upward momentum and temporary dips. Based on the historical data and forecast, Doge-Coin shows a slight upward trend. The RSI fluctuates between 38.5 and 48.9, indicating periods of both oversold and overbought conditions, but generally staying within a neutral range. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation, but the forecast prices are slightly above the recent close, hinting at a potential breakout. Considering these factors, I recommend a long position strategy. We will enter a long position at $0.0255 when the forecast price is reached. The stop loss should be set just below the support level at $0.0249 to limit potential losses. The initial target price will be the resistance level at $0.0316, aiming for a significant profit. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 30, indicating an oversold condition, we can enter a long position at $0.025. The stop loss would be $0.0245, and the target price would be $0.028. Conversely, if the price touches the lower Bollinger Band, we can also consider a long entry at $0.0248, with a stop loss at $0.0243 and a target price of $0.0278. Combining these three strategies, we will prioritize the forecast price strategy, followed by the RSI strategy and then the Bollinger Band strategy. This approach balances potential upside with risk management, aiming for high returns while protecting capital. Based on the historical data and forecast, PENDLE exhibits an overall upward trend. The price has consistently tested and bounced off the support level of $2.64, while the resistance level of $2.94 has been a significant barrier. The RSI indicates that the asset is currently approaching overbought conditions, fluctuating between 58.9 and 61.4, suggesting a potential pullback is possible. The Bollinger Bands show that the price is currently trending towards the upper band, indicating bullish momentum. Considering these factors, I propose a strategy combining RSI, Bollinger Bands, and support/resistance levels. My recommended strategy is to initiate a long position when the RSI dips below 35, near the support level of $2.64. The entry price should be $2.64. A stop-loss order should be placed just below the support level at $2.58 to mitigate potential losses. The initial target price should be set at the resistance level of $2.94, aiming for a profit of 30 cents. If the price breaks through the $2.94 resistance, a trailing stop-loss can be implemented, following the upper Bollinger Band, to capture further gains. This combined approach leverages both momentum and trend-following indicators, while incorporating risk management through support and resistance levels and stop-loss orders. Based on the historical data and forecast, the sandbox shows a slight upward trend, consolidating between the support of $0.301 and resistance of $0.358. The RSI fluctuates around 40 to 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility, which could lead to a breakout. Given the forecast prices are slightly increasing, I propose a moderately bullish strategy. We will use a combination of RSI and Bollinger Bands for enhanced precision. First, we will initiate a long position when the RSI dips below 30, signaling an oversold condition, and the price touches the bottom Bollinger Band. Based on the recent trend, let's set an entry price of $0.26. To mitigate risk, place a stop-loss order just below the bottom Bollinger Band at $0.25. The target price will be set at the resistance level of $0.358, aiming for a profit of $0.098. If the price reaches the resistance, we will take partial profits and move the stop loss to break even. This strategy combines the oversold RSI signal with Bollinger Band confirmation for a higher probability of success. Based on the historical data and forecast, Decentraland shows a slight upward trend. The price has been fluctuating within the support of $0.262 and the resistance of $0.282 for the past 2 weeks. The RSI values generally hover around the mid-range, indicating neither strong buying nor selling pressure. However, the forecast for the next week suggests a potential upward movement, with prices consistently above $0.274. Considering the Bollinger Bands, the price is currently approaching the middle band, and the forecast suggests it might move towards the upper band. Therefore, I recommend a moderately bullish strategy. My strategy is to enter a long position when the RSI falls below 30, indicating an oversold condition. Since the RSI is currently around 42 to 50, we should wait for a pullback. I suggest entering a long position at $0.274. The stop loss should be placed just below the support level at $0.26 to limit potential losses. The target price should be set at the resistance level of $0.283, which aligns with the forecast and the upper Bollinger Band. This strategy combines trend analysis, RSI signals, and Bollinger Band positioning to maximize potential returns while managing risk. This is a high probability, medium risk strategy suitable for achieving high returns. Based on the historical data and forecast, ENG Coin shows a slightly upward trend, bouncing between support and resistance levels. The RSI consistently stays above 30, indicating it is not deeply oversold, but approaching the oversold level. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation, and a potential breakout is imminent. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position at $0.0935 on March 28, 2025, coinciding with the first day of the forecast. Our stop loss will be set just below the support level at $0.0862, providing a buffer against unexpected dips. The target price will be $0.0971, aligning with the forecast high for April 1, 2025, and also slightly above the recent resistance. This strategy combines the bullish forecast with RSI and Bollinger Band signals. The RSI is approaching 50, suggesting potential upward momentum. The Bollinger Bands are contracting, indicating a potential breakout. This portfolio aims for a balance between risk and reward, capitalizing on the anticipated upward trend while protecting against downside risk. The potential profit is $0.0971 minus $0.0935 is equal to $0.0036. Based on the historical data and forecast, Uniswap exhibits a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates between 31.4 and 49.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands show significant width, suggesting high volatility. Considering the support price of $6.67 and the resistance price of $7.06, and the forecast price ranging from $6.51 to $6.71, I recommend a moderately bullish strategy. We will implement a combined strategy using RSI and Bollinger Bands. Specifically, I suggest entering a long position when the RSI dips below 30 and the price touches the lower Bollinger Band. For example, if the RSI falls to 28 and the price reaches $5.66, enter a long position at $5.66. Place a stop-loss order at $6.67, just below the support level, to limit potential losses. Set a target price at $7.06, the resistance level, to capture potential profits. If the price reaches the resistance, take profit and wait for the next opportunity. This strategy balances the risk of a downward trend with the potential for an upward breakout, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Chainlink exhibits an overall upward trend, consistently testing and breaching the resistance level of $17.1. The RSI fluctuates between 40 and 53, indicating periods of neither extreme oversold nor overbought conditions. The Bollinger Bands have been widening, suggesting increasing volatility. Given this analysis, I recommend a long position strategy. We will enter a long position at $14.8 on March 28, 2025. The stop loss will be set at $12.7, just below the support level, to mitigate potential losses. The initial target price is $15.6, aligning with the forecast for April 1, 2025, and the upper Bollinger Band. To maximize potential returns, we will employ a dynamic target price strategy. If the price reaches $15.6, we will move the stop loss to the entry price of $14.8, securing a profit. We will then set a new target price at $17.1, the previous resistance level, anticipating a potential breakout. If the price reaches $17.1, we will move the stop loss to the previous resistance level. This strategy combines RSI-based entry and exit signals with Bollinger Band-informed target price adjustments, aiming for high returns while managing risk effectively. Based on the historical data and forecast, Aave shows a mixed trend with periods of consolidation and upward movement. The RSI consistently remains between 36 and 49, indicating neither strong overbought nor oversold conditions, but a slightly bullish sentiment. The Bollinger Bands have been contracting recently, suggesting a potential breakout. Considering the support at $164 and resistance at $261, and the forecast prices hovering around $170 to $176, a moderately bullish strategy is advisable. We will implement a strategy based on RSI and Bollinger Bands to capitalize on potential price movements. Our strategy involves a long position with an entry price of $170. The stop loss will be set at $164, just below the support level, to protect against significant downside risk. The initial target price will be $184, aligning with the recent resistance levels and the upper edge of the Bollinger Bands. If the price reaches $184, we will move the stop loss to the entry price of $170 to secure profits and manage risk. Further, if the price continues to rise, we will adjust the target price to $190, based on the forecast data and the potential for further upward momentum. This approach combines the momentum from the RSI, the volatility indicated by the Bollinger Bands, and the key support and resistance levels to maximize returns while minimizing risk. Based on the historical data and forecast, EOS exhibits a slight upward trend with periods of consolidation. The RSI consistently hovers around the 40 to 56 range, indicating neither strong overbought nor oversold conditions. However, the price has consistently found support around $0.55, and the forecast suggests a potential move towards $0.595 within the next week. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position at $0.568, coinciding with the first day of the forecast. A stop loss should be placed just below the support level at $0.54 to mitigate potential downside risk. The initial target price is set at $0.595, aligning with the forecast high. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading near the middle band, suggesting a potential breakout. If the price breaks above the upper Bollinger Band, $0.614, we can consider raising the target price to $0.636, the resistance level. Conversely, if the price fails to sustain above the upper band and revisits the lower band, $0.448, we should tighten the stop loss to $0.55. This dynamic adjustment, combined with the RSI and support/resistance levels, provides a robust framework for maximizing returns while managing risk. This portfolio combines the RSI, Bollinger Bands, and support/resistance strategies for optimized efficiency. Based on the historical data and forecast, Tron shows a slight upward trend with price fluctuating within the support of $0.233 and resistance of $0.244. The RSI is generally between 40 and 53, indicating that the asset is neither significantly oversold nor overbought. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Considering these factors, I propose a moderately bullish strategy. We will enter a long position when the RSI dips below 40, indicating an oversold condition, and the price touches the lower Bollinger Band. Specifically, we will enter a long position at $0.215. The stop loss will be set just below the lower Bollinger Band at $0.213 to limit potential losses. The initial target price will be the resistance level at $0.244. However, given the recent consolidation, we will implement a trailing stop-loss strategy. Once the price reaches $0.23, we will move the stop-loss to $0.228. If the price continues to rise, we will adjust the stop-loss accordingly, ensuring a profit while protecting against a sudden reversal. This strategy combines RSI signals, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Suncoin demonstrates a sideways trend with support at $0.016 and resistance at $0.0183. The RSI fluctuates between 34.7 and 58.0, indicating periods of oversold and overbought conditions. The Bollinger Bands show that the price has been fluctuating within the bands, suggesting volatility. Considering these factors, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels to maximize potential returns. My strategy involves 3 positions. First, when the RSI falls below 30, enter a long position at $0.0153 with a stop-loss at $0.0150 and a target price of $0.0177. Second, when the RSI exceeds 70, enter a short position at $0.0181 with a stop-loss at $0.0184 and a target price of $0.0167. Third, if the price reaches the support level of $0.016, enter a long position at $0.016 with a stop-loss at $0.0158 and a target price of $0.0177. This portfolio balances risk and reward by capitalizing on both overbought and oversold conditions while also leveraging support and resistance levels.